Another important type of liquidity I want us to talk about in this video is the trend line liquidity. Yes, I mean trend line, all this concept, how to draw your trend line and how to take a trade with it. Now, trend line is a very, very simple price action concept, but then there is also a very important concept I want us to pick from this particular information. So looking at my sketch now, you can see that trend line is simply looking at how price behaves around a diagonal pathway. So basically, this is what you're going to see when you're dealing with a trend line, where you see price behave around here, touching a particular level multiple times. Mostly this type of level is diagonally drawn. So every time price comes back to touch this guy, we expect it to go back up, and it ensures price continuation. This is very basic, but then how can we now use this information to trade and also identify liquidity areas? Now, when you look at this carefully, you're going to see that if you are a trader, you will want to expect price come back, all right, still to the same diagonal area and take a buy back up there. So that's basically what it is, right? And we said that liquidity can be found either above highs or below lows. So we are looking at this guy and we are assuming that every time price leaves this area, there is liquidity resting below all this guy, and we have a pool of liquidity resting around that area. So if this guy is going to come back and retest this area, we're expecting to see that if this guy finally touches that guy, this particular diagonal area, we are expecting to see you put your stop loss where I want to go long. This is yes. If you're taking a trade here, your stop loss is obviously going to be somewhere around here, and then you're going to target somewhere up there. So this place your stop loss is basically liquidity that is resting, right? That is basically liquidity resting. And then aside from that, there is also another way trend line traders trade with this kind of information, either the breakout or the trend line retest strategy. Okay, so for the breakout is basically you expecting price to crash below this diagonal line and close below it, and that is basically what the trend line breakout system is. And when price comes back to retest it, you're going to go bearish in that direction. And this is something that a lot of us have used. I'm not negating the fact that these things can actually work, but then there is a lot of limitation with this kind of system. Now, if you go back to the concept of structure, remember we started by explaining market structure. Now you realize that if you're going to do market structure delineation, you're going to find out that you have a break of structure here, break of structure here, break of structure here as price goes up. Now, the elements of a genuine trend is to have higher highs and higher lows in an uptrend, and then lower highs and lower lows in a downtrend. So looking at this, you can see that we have a higher high here, higher high here, higher high here, higher high. Same way, higher low, higher low, higher low, higher low. So we are only expecting to see this trend changes direction when we finally take out this last, what do you call it? Higher low, right? But then the limitation with the trend line strategy is that this guy is going to start expecting to sell here when this particular trend has not given us a confirmed shift in market structure. You now see that. So while this guy is basically selling from here, we are still looking at this trend as a bullish movement because we have this guy still resting here. We are only targeting the liquidity below here, basically the diagonal liquidity, which is the trend line liquidity. And then the uninformed trader, if you don't know these concepts, you're basically going to be taking your trade where you're going to go bearish from here and probably put your stop loss somewhere above here. That's basically how it works. But then the limitation is that you don't get to see what comes after that. So probably price is going to take out all the liquidity and what? Continue upward. You see that? So it is important you get this concept correctly so that you will avoid being in this type of trap. You see, the diagonal liquidity has been taken out and boom, price is finally up there because we still believe that this trend is still actively bullish because this is a break of structure ensuring bullish movement, break of structure ensuring bullish movement, break of structure ensuring bullish movement. I hope you understood what I just explained. The same thing when you're dealing with a downtrend, you're going to experience the same thing. Price coming in the downward direction, leaving all this guy touching it, and it finally comes here, coming back to breakout. Now for the trend line breakout traders, this is it. You're looking at this and you know this is the last lower high, lower high, lower high, lower high. The same thing happening, lower low, lower low, lower low, and lower low. And you're not supposed to what? Take a trade here. We're not supposed to go bullish from here. Why? Because we are not yet bullish. We have not shifted structure. We can only confirm a shifting structure when we finally close above this guy. Don't worry, I'm going to show you an example and then you're going to see how it works. So if we close above here, then we can say, yes, we are now bullish and we can come down and go back up. But then this guy, this is what they do. The moment price closes here above this diagonal line, they just wait for a retest and boom, then they're out of the market as liquidity. So there is a liquidity here resting and this area, a bunch of it, and that is the pool of liquidity we expect price to actually trade into. I hope this is well understood. So let me show you an example here. I saw this particular one here, and you can actually look at it as a very, very important diagonal liquidity. And if you're doing market structure delineation, you would want to start like, okay, let's say this is a shifting market structure to the bullish side because we can see a downward movement finishing around here. So starting from that guy, we have a market structure shift in the bullish direction. You can consider this as a break of structure somewhere around here. So I'm drawing it gently so you can see somewhere around here. You can also see this guy, break of structure, break of structure. What do you see? It is ensuring a bullish movement, right? All these guys are ensuring that we are bullish in that direction. So what the trend line guy will do is that this is the time for him to start selling. Why? Because he can see that this guy closes with the body of the candle below the diagonal line. And what does that mean? It is a breakout for him and he's going to start activating a sell order from here. You see, break and retest, and that is what he does. Stop loss probably above there and probably targeting somewhere around there. So that is how the trend line breakout will look out this. But then what we are seeing is that we're simply seeing liquidity here, right? Liquidity resting here. For the guy taking a buy earlier, maybe because of this touch, I want to show you this. For the guy taking a buy, probably because of this area, he would be in this trap also, right? Stop loss probably below this trend line, and this guy also is here. So we have a pool of liquidity there. You see that? So at that point, somebody is getting stopped out and somebody is being uninformed and is getting into trouble from that level. So as you take a trade from that level, you're going to see the reaction of price. You see that price, what? Price created a new break of structure, which is a very, very obvious one. That is a break of structure in the bullish direction, ensuring a bullish movement. So, and while you're looking at that, the smart money trader is looking at this area as what? A bullish order block that price traded into, a fair value gap that price well traded into in that same direction. So you're not just taking a trade, you're taking trade with information. And that is how you can take advantage of those kind of liquidity and take trade with those very exact information. This is not about trade entry. I'm just showing you the type of liquidity and how the chart manipulates you into taking some of these trade because of the limitation of these concepts that are commonly seen in the industry. So you have to be very careful while you do that. I hope this gets deeper into your mind, and then let's go to the next video as I show you how to use liquidity properly. See you there.